Tesla, first one on the list. Guys, as you can see, I've been long Tesla since this secret setup right here. But look, you guys, Tesla was a little trappy yesterday, flagging, but look, we're still rejecting the 34. And all right, so Tesla's still pretty bearish in my opinion. Look, strong move down, flag off the weekly 8. Right? Strong move down, flag off the weekly 8, fake breakout trigger. All right? That's a weekly bear flag. Look at it. Daily chart, 34.50 bear flag. So, now we're waiting. Look at secret setup tomorrow possibly. Off the bear flag. Lower high position. This is what it is. Yes, that was a nice move, fake move off support, but all it did was go up and reject the weekly 8 and the daily EMA. Still bearish in my opinion. I probably should have took more profits up here, but I didn't. So tomorrow, if we get a spike to lower high position, I'll probably short and get out of my long position for now. And then I will look to easily just, you know, if this goes like this, you guys, all it needs to happen, it's not a big deal. Look where Tesla is, right? If you look at this, right? So Tesla, this could still be, look. This could still be a giant flag. No problem. But the problem that you have, if you go into the daily chart, is this. This could also be a flag right here. Right? But this is also a channel, you guys. If you look, right? We did touch the lower channel line, but we didn't make it back up to the, you know, we got to get back over these daily EMAs. It's, you know, I probably won't get out unless it comes back to my entry on the rest, but I will definitely think it's a good short right here still, but it might just go like this. Remember, higher lows, higher highs. It could come back down to here again, and then either break down or make a higher low and try to go back up to there. We don't know yet, but it's below the daily EMAs. So the other way that I'll play it is like this. Whatever happens, right? Let it prove itself some strength. Maybe tomorrow or the next day it comes down to this trend line, and then it goes off the trend line again, gets on top of the EMAs, and then comes back down to the EMAs and the breakout point, and then we still have room to go back to the upper channel line, right? Whatever it does, it's fine. I'll be watching it for either way. Just right now, it's bearish. It's still below the weekly and the daily EMAs. Trying to long below the weekly and the daily EMAs without being at a key level like this channel or a key support is just hard. It's just hard to do because it's just going against the trend, right? So as we can see, we got the trigger here. So now we'll see what happens. It might come down, break this trend line, come all the way back down to here. We'll play it by ear. But tomorrow, the next safest trade is secret setup short, below the daily EMAs, below the weekly EMAs, and right below this gap fill, which it just about filled, right? It's normal for a stock to fill the gap and then come back down off the daily EMAs. So that's pretty basic, just using the EMAs as a guide, knowing that we're in the channel, but we're kind of mid-range and we're directing the weekly and the daily EMAs, right? Not a... you know, not something to force along into the daily EMAs on. Yeah, the gap fill was pretty close right here. 207, we'll call it. So 207. I mean, you could have shorted that right there. A little right below it on this double top stuff right here. I wouldn't have shorted it right here, but when it came back down, came back up right into lower high position, you got this stuff. You could short it with your stop right here, knowing that you're right below that gap fill price. That's not a bad trade. Sometimes it doesn't fill perfect, right? It doesn't always get to our levels perfectly. We never know. It might get, just like that short on AAOI. Didn't actually get to the level perfectly. It just rejected right below it, right? It's just part of trading. You just got to, you know that you're close enough that it's not totally stupid. Next we had Root. Guys, Root just is too grindy. Look. Look at the daily chart, right? First of all, we're coming off this big ass accumulation here plus a fake breakdown right here. This is what triggers that move right there, you guys. Soon as you have an accumulation pattern right here, right? This is a big accumulation pattern, and you get a fake breakdown. Look at this. You get a fake breakdown, then back into it, back on top of the EMAs. Guys, this is literally like a sick trigger right here. Fake breakdown into a pivot that it already broke out of, and then reclaim of that accumulation zone. I would have definitely longed this if I saw this pattern right here. Right at the flagging, right on the daily EMAs after a fake breakdown back into accumulation zone. This is a sick long right here. 888, risking like less than $1. Boom. Amazing trade, but we missed that. So now, we're getting extended, right? Today, look what it did. Just dip quick back down to the 4. So, guys, the only way I trade these is I either want to see something that looks like this, da-dee-da-dee-da-dee-da-dee-da, and then goes like this, parabolic speed up in price, and then we trade the trend break right here, trend break of that speed up in price, and then the stock comes back down to the 10-minute EMAs or lower. It's either that or this has to friggin' go like this. One of these days, we're going to get a huge gap up off of the friggin', off of the daily 4 and 8, and it's going to give us a paint stripe just like NVIDIA and all those other ones do when they gap up that far. Big red paint stripe exhaustion gap, right? But look at the volume, guys. There's no exhaustion. There's no parabolic reversal volume yet. It's just slowly. Volume's going down, and the stock's just grinding up. Those are dangerous because, first of all, volume's not confirming the trend, but it just keeps grinding up the 10-minute EMAs. Look, guys, stock's in trend. 10-minute 21, 10-minute 21, 10-minute 21, 10-minute 21, 10-minute 34, just 10-minute 21. You don't want to be shorting that. The only other way to trade it besides an exhaustion gap and a parabolic speed up is that we the 10-minute EMAs cross to the downside, we break the most recent level of support, and then we bounce back up to lower high position. That's it. So this would have to break these EMAs. It would have to take time. It would have to take time for these to start getting tangled, then break support, they curl to the downside, then we get the fib bounce back up and short. That's it. There's only three ways that I'm trading this. Parabolic speed up, exhaustion gap, or secret setup short. Other than that, you're just trying to short an uptrending stock getting smashed in the face. Pointless, and pointless. Gonna have a tough time trading that. That's it. Right? So we just gotta wait. We'll keep it on watch and see what happens. Hopefully, like one of these mornings we'll wake up and it will be gapped up $5, $10, like a huge gap up for fucking, and preferably not on earnings, just on some fluff ass news. That would be ideal. Right? So that's the only way we trade that. All right. Next we had VKTX, right? Is that what it was? VKTX. Where did you go? Is it VKTX? No. What was that ticker? VXTC? Hold on. Jesus, I'm losing it. What, guys? What was the ticker we traded this morning? VKTX. All right. Shout out to Samurai because I wasn't even watching this, didn't even know it, but that's, I guess, the one thing about being in a lot of rooms and you don't miss anything. Look what happens, guys. When you get a huge flush and then a grind back up, look what slowly you're doing, pulling the 4 back up to it, right? If this thing keeps going higher, by the end of the day, the 4 is going to look like it was tucked right there. But that doesn't matter because for us at the open, it was like down here at it was at $50 around there, so we were 40% off the daily 4. Huge gap. No resistance, but that doesn't matter. Look at the weekly chart. Way off of it too, right? Guys, look though. Look where it opened. Weekly 8. So now, what happened? We know we're extended. We know we're up. And we also know that we started to show weakness during the pre-market. Remember when we had a left shoulder, a head, and a right shoulder. So preferably, ideally, the best trade would have been this and this. This would have been the best trade right here, obviously. That's why we had to 2-bullet it. Now you either could have 2-bullet it, or you wait for the rejection, short it, and jam your stop tight. Maybe jam your stop over the next fib or right over this fib. I chose to 2-bullet it, which kind of sucks because then I don't get full size, but I was going to short right here, add a little right here. As long as it's not that far, right? Short, 77, add at like 79. I wouldn't want to be adding $5 higher because now I'm too upside down. I'd rather just hit the trigger right here and short. But this played out great because we saw it go to the 50 fib. As soon as it started to reject, boom, short. And then we got a, almost a 20-point drop, which was great. And obviously I was hoping that it was going to come a little closer to the daily 4. I was hoping it would come, with that daily 4 was down at 50. I was hoping it would come to at least 53, 52, knowing that it could wick back up and pull it up to it. But it just didn't quite go as low as I wanted. Maybe I would have thought, okay, cover into this wash, into this big-ass wash, but it looked like it was going to halt for a sec. Plus, I started celebrating and stopped paying attention for a sec. That's always a killer. But I'm sure most people covered into this big-ass dump since it was such a big drop. The other way, guys, if you missed this first entry, then obviously the next best entry is a fib bounce inside of a fib bounce, but it didn't quite bounce that high, right? So you could have got in right here, but now you're risking a little more. So if you shorted right here, right, 71.80, you're kind of risking like $6. It's still a sick trade. And then the other thing you could do, obviously, wait for it to reject, wait for it to set up another consolidation pattern and break the lows right here. Right? You could short right here with the stop right here. That way there you're minimizing your risk, right? You're shorting at 69 where you stop at 70, but stuff like that is going to get you stopped out more. But, would have been ideal if it came back up to here, dump, pop back up to here, then dump again, but there's multiple ways to skin a cat, you guys. You can wait for the top and tail to short. You can 2-bullet while it's going up. You can wait for the dump and bounce if you get a fib bounce, or you can wait for a consolidation pattern to break and put your stop right above, right? So that was pretty sick trade. And also, guys, I want you to notice, look. Guys, remember what I was talking about this morning? It didn't end up being a total reversal, obviously, because we whipped off the 4. But look it, this, based on the pre-market volume forecast, I knew this was going to be a reversal volume day, which gave me confidence to hit this on the short, even though now it ends up just being like not really a reversal volume day. But as you can see, it's, look, this is why I always say too, guys, always check this in the morning. Look. Always check where you are based off the 10-minute EMAs, right? So over here, we're looking good. Look, it opens right here. They got pulled up a little now, but look. Look, you guys, that's 25% off the 4, even farther off the 8. That's a great trade. And then it comes back to the 4 and goes because the 10-minute EMAs, look, strong move up, flag off the 8, and you get this crazy under-over trigger, which is beautiful. So keep those up on the side. At least be aware where you are relative to the 10-minute EMAs, all right? Check, how far are we off? If this thing ended up selling off in the pre-market, right? If this ended up selling off in the pre-market and opening right here, that wouldn't be a good trade. Look, the 4's right here, the 8's close. I would expect that to just open and friggin' drive, right? I would expect that to just open and drive higher because of the too close to the 10-minute EMAs. Right? Now, look, for example, IFBD. Check this out. Look, you guys. Look where IFBD opens relative to the 4 and 8. This is insane, dude. Now, obviously, there's other things to this besides that, but look, 30, 40% off it, 42%. That's a huge gap off the 10-minute EMAs. Now, guys, this is why I say this all the time. Why do we care about red flag criteria if you're trading discretionary, right? Hold on. We care about red flag criteria if you're trading discretionary because it mostly keeps us out of headache tickers. But, guys, at the end of the day, we really don't know what's going to happen. The thing that's great about a system is that, guess what? You're going to get stopped out sometimes because you didn't pay attention to red flag criteria. but you're also never going to miss you're never going to miss a 70% drop because you were looking at red flag criteria. Guys, if you're trading a system, this is kind of like you can't afford to miss this, right? This blows to miss if you're trading a straight system. So that's why I'm not really like caring about red flag criteria anymore. I just face the facts. I'm going to get stopped out sometimes, like yesterday when a stock didn't behave well, but then look what happens today. So you lost yesterday, and today you have a 70% gain instead of losing yesterday and then saying, you know what, China, piece of crap. I don't really like China stocks. Even though this fits the system criteria, I'm not going to trade it. Well, guess what? You just missed out on a friggin' $5 drop. Guess what? That blows. That blows. So, let's not worry about the friggin' red flag criteria for a bit as we try to master systematic trading. And then we can decide, once we've done both for a long time, which we've obviously done discretionary for a long time, now we can do systematically for a while and see which one we all like better. I mean, I tend to lean towards systematically because I've traded discretionary for so long, and I just think systematically is the way to have a much less stressful trading life, and I just like it. For some reason, it makes me feel like I think I lean towards that. Even if I make less money, it's just such an easier lifestyle. Even if it hurts my ego more because I get stopped out more, but it's just a better, easier way to trade. Short, stop, cover in the day, have a nice life, do whatever you want, right? So this, unfortunately, ended up being perfect, of course, because no one traded it. Always the way. The best trades are the ones we never miss. So the only thing I hated about it, besides the fact it was Chinese, you guys, look. Oh, look at this, you guys. This is what sucks. Look at the perfect pivots right here. But Dash Trader didn't have this, and even my TOS this morning I thought looked different than this. Now look. Ultimate high pivot, multi-touch, ultimate high pivot, right? This is a kind of a killer. Because this didn't look like this, I swear, this morning. Anyways, so now look, guys. 890. I don't think there was one up there, but I think the next one was 8. I think the next one, well, it might have been. No, the next one was like 10. You have a mini crappy pivot right there. Yeah, so there's no pivots over 7 until 10. So that kind of sucks. But look, of course, you guys, look, we were talking about in the video last night, stock goes up. Does it hold this level, you guys? Did the stock do a breakout and retest right here? No, it broke out. It failed that level. It failed that level. It failed multiple levels. So look, once it does that, it's showing you weakness. Look, lower high position. Lower high position. Now, that was obviously the best entry. And then, if you're trading the system, you would have took half size at the open, or you would have either that, or you would have done the 8%. You would have hit it at 8% right here, right? Full size, 640 with a 25% stop, which would have put you up around there, right? And you would have had, so you would have been risking, if you followed the system exactly, 8%, you would have been risking about 640 to 740. You would have been risking about $1.70, $1.50 we'll call it, and then you could have made 6 to 450 is 1R, $3 is 2R, $2 and $1.50 is 3R. You might even get 4R trade on that just following the system. Now, if you're a discretionary trader and you hit it right here, 770, risking about $1.20. Well, guess what? 770, 650, 1R, 530, 2R, 410, 3R, 290, 4R, 170, 5R. Look at 6R already if you're covering at the end of the day. And I'm guessing by the look of this weak-ass shit, best cover end of day is coming. So that's a big, huge miss, whether you're trading discretionary or trading systematically. That's a bummer to miss. I don't even think Matt could get locates either for the system, so that kind of sucks. You get fucking 2 losses on the system yesterday if you traded Holo and ZVNA, whatever it was, and then you can't get locates for the best fucking short. So that blows, right? But that gave a nice JJ fade setup and systematic setup. Didn't really have a great stuff at open, but you would, like I said, you would either went full size at 8% or half size here and half size on the rejection. Also gave you this, if you didn't hit it right here, you guys, and then it fell down, it broke the support, it bounced, look. Remember, lower highs and higher lows. Lower highs and higher lows. Hey, look at that. Stock made a high, it made a lower high, 61 to 78% fib. Or if you missed that, consolidation break, short right here. Stop short right here. Stop goes right here if you want to jam it. If you did that, if you shorted right here, jammed it right here, can't even tell you. It may seem like a worse trade because you got in lower, but look what happens. You short at 585, you put your stop at 620. You're risking 40 cents. All of a sudden, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours. That's why I always say, you guys, never mind if you did it right here, right? You short lower high position, 650, risking 680, 30 cents, guys. If you short it right here, 650, risking 680, you got a 30 cents risk. So every dollar, you make it 3 hour, 550, 3 hour, 450, 6, 350, 9, 250, 13, 12, right? So plus a little extra one too. So guys, it's all types of ways to trade, but some of them give you much more risk reward than others. You just may get stopped out more. So grateful that we had 3 awesome trades, but that would have been nice to hit, you know. Kind of sucks. So what are you gonna do? It happens. Of course, because that happened, it's gonna just keep trickling away. And I've seen this happen many times on the daily chart. I'm guessing this is gonna come down to here by end of day, maybe by tomorrow. It might even go lower than that. Shit, it's already below the daily EMAs. Who the fuck knows? Imagine that, 50 cents. That's a bummer. Big time bummer. All right. Next, we had AULT. AULT. Guys, this was a little like, honestly, I wasn't really feeling this that much because of this weak-ass daily chart, but I did know we had this right here. Remember, guys, I like recent resistance. I don't like gaps to fill way above because sometimes they can go crazy and fill the gap, right? But I always love very recent pivots that are clear to see and in everybody's mind, and that was on decent volume too. 72 million, so there's a lot of baggies here, a lot of long bag holders, right? Now look, you guys. Lower high position. Over and over and over again. We got lower high position. Also, guys, look. Where did we spike to relative to the 34? Boom. Where did we spike to relative to the 34? Boom. Where did we spike to relative to the 34? Boom. So, now we know we have pivot right here. We have the 34. We also have lower high position. So, what do we do? Look, you guys. The stock is from 93 cents opening down at 76 cents. 0.93 down to 0.76 is 18%. This is a gap and crap setup. Now, it's not more than 30% down, but still, gap and crap setup, you can trade half at open, half on fib bounce and rejection, right? Or you can just wait until you friggin' get a pop and stuff, which is what I did. It popped, it stopped, short. Bam, right there, enter. As soon as I saw it, boom, boom, short. Now we're in the driver's seat. I obviously didn't love how this looked, you guys. It's so friggin', I mean, guys, yes, all the things were nice, but it didn't have a lot of range between pivots here, right? So I thought, geez, is this thing just going to open, hit the 8, and then start grinding back up and go back to this pivot? I don't know. So it didn't matter because guess what? Hit the stuff, cover some into the wash, cover some into the wash, cover some into the wash. Have a nice day. With a big-ass gain shortened from here down to here, 38%. See you later. I could have got 45%, but whatever. It's already a sick trade, and I didn't really love that range, so plus the price is a cheapie. But that was a beautiful trade, beautiful system trade and discretionary trade. It, in fact, didn't quite make it to the 61 fib, but we don't need that on gap and crap. Remember, you just wait for, you can either hit it on a 6% spike, which would have put you right here. You would have top ticked that on a 6% spike, or you wait for the pop and stuff and hit it. Boom. All right. So that was beautiful. And what does it do, guys? Look, like clockwork, all the way back to the daily 8 it goes. If they can't bounce off pivots, then they're most likely going to go back to the daily 8. You know? And also, guys, remember, this was a... Guys, oh, shit. This is my doctor. Guys, this was a friggin' high cash need, high risk dilution. Remember? AULT, high cash need, high risk. So, dilution plays a big factor in these, and that's why I want to go back and look at them, even though we can't really look at them from all the, can't really look at them from when they actually happen, but we can try to figure something out. See if it made a really big difference. All right. Next, we had, what was it? SOUN? SOUN. SOUN. Guys, SOUN was really a good setup because, look, guys, gap up, right? Strong move up, flag off the 8, perfect. Huge rip on reversal volume, but also breakout volume. Then another gap up and spike. Super duper high chance of a topping tail daily here. Big move up. High chance of a topping tail daily, right? The only thing that stinks is this. Where is your pivots here? Where is your pivots? There's no pivot right there, right? So this is the pivot. This is the pivot that I'm staring at, begging for it to go here because there's a super duper high chance of a top and tail daily, but I don't have any pivots there, and I really am just super disciplined and wanted it close to my pivot. Now, don't get me wrong, there's a whole dollar, $8, it's a whole dollar, plus you have the pre-market high, so still a valid setup. I just thought it would be able to push a little higher to 875, and then I would have smashed it. But that being said, you did have a fake breakout right here. This is a pre-market high, you guys. Also, a whole dollar right there. And then look, a beautiful, perfect. Guys, trends are made to be broken. When the trend is this obvious, not to mention, you guys, look. Not to mention that ran up 22%. That's over the median spike for gappers. So, when the stock has a clear trend line and it breaks, it causes a shake in the stock because it's so clear everyone can see it. If you longed it down here, or you longed it strong move up, flag off the 8, or you longed it right here, flag off the 8, you're holding. Once you see this trend break, you're like, fuck that, I'm out. This thing's done, right? It's a top and tail daily, and it's done. And if you didn't hit the trend break, the next best thing would be the bounce. Preferably, it would go to the 61 fib. It didn't quite make it, but still, if you see the rejection on the 50 fib, take it. Even on a day 3 top and tail or a day 2 top and tail, even if you're risking the highs from here, you can still get a decent risk-reward trade, right? Think about it. So, even if you're risking 750 to 8, you're risking a 50 cents, right? You still could get 1, 2 odds, maybe more. Not bad, but not as good as if you hit the trend break right here, right? Not as good as if you hit the trend break right here, 66. This is how risk-reward makes such a huge difference, you guys, right? If you hit the trend break right here, now you're risking, let's call it 70, 90. You want to put your stop over the dollar. Let's say you're risking 30 cents. That's a huge difference. Now you got 1 hour, 2 hours, 3 hours, 4, so it makes a big difference. It all adds up over time. So this would have been perfect, A+ if it went to the daily level. But it was still a good trade since you had the fake breakout trigger of the pre-market high and $8. So still a valid setup, just not as good as if it had a daily level there too, right? All right, next, OCEA. OCEA. All right, let's see what OCEA has done. Guys, this morning, OCEA popped up to, where was it? No, that was a different ticker I'm looking at. All right, so OCEA, guys, the volume was down a lot. It dropped big. Guys, whenever you see these kind of top and tails, you can expect, look at this, right? Let me show you something, all right? Do you see from this candle here, right? Look at this. Look at the day one, all right? Day one did not retrace more than 50% of the move, okay? That's why it was easier to break out on day two. But look, day two now, look at this. Not only did day two do a fake breakout over day one's high, day two also retraced all the way back to the 61% fib. That tells me that lower high setup is good to go. The angle of life and the volume, this should hold. This high should hold. That's what it tells me. It dropped too far to spike from here and break out. Doesn't happen very often where you drop this far, open, spike, and break that high. It just doesn't happen. So, we already know that. We also know, look, we also know that. We also know this. Pre-market at the time when I said this morning was down 88% the volume from yesterday. That's not good for the stock, right? Volume's down 88%. So what are we looking for now? We know we're looking for the angle of life. What is the angle of life? 78 fib is the best angle of life, right? So ideally we want the 78% fib. But the minimum, if we can get a spike to 61. Not the best. The reason why this went up here still is because, look, at 229, you're risking too much to here. So if you get a nice trigger like we got, that's why I didn't take it on this first move up right here. I was like, it's not in my zone. You know, I'm a stickler, guys. I'm a discipline. I want it in my zone. The only way I will trade it out of my zone is if it gives me a nice trigger once I see it top out. So I didn't enter here. It dumped. I was talking on the mic. I said, I'm waiting for this to go back up to see if it can give me a fake breakout or this candle turn into a top and tail. And then as soon as I start flushing back down, bang, enter with my stop up above the 61 fib. Cover, cover, cover. Have a nice day. Done. Now it gave you even better setup, but the time of day blows. This is the true setup that we want. Big ass stuff up at 78% fib. Because guess what? Guess what, guys? At 250, you're only risking 25 cents. Now look what happens. 1R, 2R. If it comes down here, 3R. Your R's are just way better if it keeps flushing. This is the ideal angle of life, right? 78% fib. Angle is really the fucking best one. That puts you at the, fucking, you know, this angle that I like at the top of a flag pattern. So now, guess what? This is what I talk about every single day, you guys. I don't care if this stock goes like this now. It doesn't matter what it does. It could go like this. And then tomorrow, it could wait for the 4 to catch up. And then tomorrow, it goes like this. That's a flag pattern. Boom. Who gives a shit? Because this is why the first lower high is the best trade in all of lower high setups, because we can almost guarantee that it's going to make a lower high, even if it's flagging, waiting for the daily 4 to catch up so it can fucking break out off it. It doesn't matter, because right here still has a high chance to make a lower high, right? We see it over and over and over and over and over and over again. So what happens after that does not matter, because I'm covering back down into support anyway. So I really don't care. All right? So that's pretty much the, that's what it is. I think that's all the stocks. Anybody else have any tickets? Tickets. Anyone? I don't want to make these videos too long, but VKTX, yeah. Did you see what happened? Just came back to the 10-minute EMAs. Look, 10-minute 4 and 8, fucking drive off of it. That's why I like to keep these up. Yeah, Tesla secret tomorrow. Off the daily 34 and 50. We'll keep that one up. Because I think Tesla's going to come back down now. It's really rejecting the... We talked about this one first. Tesla is like really fucking hurting, guys. It rejected the 34, did a fake breakout here. This should come back, break this, come back down to here now. Just didn't want to do it right here, but now it could at least go to this trend line. Hopefully we get the pop back up. Hopefully we get, we were talking about something else right here, but hopefully we get the pop back up here to secret short before we hit this trend line, and then we can take it down and break the trend line. So tomorrow now we're just, that's it. Guys, did we break support? Did we break the first level of support? Yes, sir. We broke those, what, the 10-minute EMAs crossed to the downside. Yes, sir. Fib life to the fullest. Yes, sir. Here is the zone. Secret short zone right here tomorrow morning. Boom. Sick. Be perfect. Right? Perfect, perfect, perfect. Where's my... That's my favorite emoji of them all. Let's look at ATXI. ATXI? AXTI. I'm dyslexic, you guys. Dyslexic. Dyslexic. 10-minute EMA power. But the thing I didn't like about this, you guys, the 10-minute EAs are awesome. But, well, it's really dangerous longing this far off the 8. The 4 was kind of close, but obviously you can long the flag break, especially with the 10-minute EMAs there. But I personally just don't like longing that far off the 8. Too many of them go like this. Too many of them go like this, and then they fucking instantly just fucking flush back down because it's just so extended already. But, I mean, this chart is pretty beat, so you can understand, obviously, this thing could go like this, right? To at least the 38% fib, even the weakest stock can bounce to the 38% fib. Even if you move your fibs down here, you know, it could go to 50, 61 fib. But if you're not going to be tucked on the daily EMAs, you guys, if you're not going to be tucked on the daily EMAs, use the 10-minute EMAs as a guide. So you, for the best longs, you need one of two things. You either need the daily EMA to be tucked right there, the 8 EMA, or 10-minute EMAs cheat code, obviously. You know, 10-minute 21, 10-minute 21. It's just, these are literally cheat code to pretty much any long setup. So just have to understand that the ones that are further extended off the daily EMAs have a higher chance to do a fake breakout. But you don't have to worry about a fake breakout if the stock's just grinding like this. It's mostly when they rip hard, then they dump hard. Any other tickets, you guys? Oh, fuck. No? Any other tickets? All right, stopping the recording.